We heard the Fed last week say everything but the S word, right? Everything but stagflation. They said they are expecting higher unemployment, slower growth, faster inflation. When you put those three things together in a mixing bowl, they usually bake up into the same thing. And so I think the Fed is taking very seriously the balance of all of these risks. But given the tool that the president is using to prod all of those things, the Fed's toolbox is limited to respond to it, and simply moving around the Fed funds rate isn't quite the right screwdriver or whatever to deal with the ramifications of that.
Well, how much of a picture do you think the president's going to paint tomorrow, as opposed to a partial image of what's to come? Because there was great hope for a clarifying moment. I'm not sure we can find anyone who expects that.
I just heard reporting from the White House that the press secretary said that he is crafting the perfect tariff policy, and that everything will be clear tomorrow, and that they expect certainty for markets tomorrow. It's one thing to move your announcement back to when markets close at 4 p.m. It gives you a little bit of a buffer of what markets can respond to. And so he has said that those tariffs will go into place immediately, no 24-hour, 48-hour, month-long lead time. Yeah. And so even for the folks who have to enforce these tariffs at our ports and borders, they have to have certainty to be able to levy those tariffs. So hopefully something will be written down, but I'm not confident, given that the president has moved from just reciprocal to 20% blanket to different policies for different countries. It's very difficult to do that in 24-hour period.
Well, and so if this is immediate, what will the impact be on businesses who have tried to, I guess, in advance import what they can, make investment decisions according to what their best anticipation of could be happening? If this is immediate, how immediate will the impact be on their actual supply chains if they haven't had a chance to fully reorient them or to stockpile enough to last them for a while?
We have seen for a couple of months that companies were expecting something on the tariff front, and so they have been stockpiling a bit. You saw that in the ISM report this morning. You saw it in durable goods a week ago. We have started to see companies, and even in their annual earnings calls, which have been going on the last few weeks, they have said we are putting orders in, trying to get ahead of these things. As you know, a month ago, he put in place the Mexico-Canada tariffs and then rolled back or paused many of those for a month. So for these companies, it's very difficult to have any sense of certainty. For most supply chains, the orders they are placing right now will likely not hit shelves for 6 to 12 months. And so I think the real question here is, when do companies start hiking prices for consumers? Is it immediate, even though those goods are not the ones being tariffed? Do they try to pad that a little bit to see if things come down? What certainty can consumers expect, I think, is a big question. But on both ends, you are seeing in both in small business uncertainty and consumer confidence and sentiment, everyone is uncertain right now. Wall Street, consumers, workers, small businesses.
It's really interesting to see consumers take part in that. It's one thing for corporations to be front-loading these tariffs here, but the word we got today from General Motors, deliveries up 17% in the first quarter, 15% gain in retail volume. Ford saw retail sales rise. Toyota up from the same time over last year. People are aware of this in a way that they might not be other economic trends or stories where they want to get something done before tomorrow. How far could this go from here?
We've seen polling that about 80% of people are aware the president is doing something on tariffs, and almost all of those people are aware that it will cause prices to increase. The approval of those tariffs is very mixed. It's almost a 50-50 split as to whether people like them or not, even knowing that their prices will increase. But I think after 4 years of consumer uncertainty, what Heather Long from the Washington Post dubbed it whack-a-mole inflation of something is always popping. Consumers have become a lot more price sensitive in the last 4 years, just given various bouts of inflation, and especially now with sticky high prices. And so I think they pay attention to a lot of this stuff. The president is also out there every single day saying he will do something, not saying what he will do, but saying he will do something. Tariffs have been the news du jour for almost the administration.
That would suggest, though, that we're going to have a big downturn after all of this front-loading in the first quarter. What's the second half of the year going to look like on a car dealer lot? I
mean, you've already seen that ISM is saying that this is the first contraction in a number of months, 2026, I think. It is not good. I think for those car dealerships, even if these things have carve-outs for North American autos or for some countries, it's not quite clear how you can even move forward, because in a month, the president might do something different. I think both for consumers and businesses, it's just a difficult kind of environment to operate in and to make large decisions like buying a car, buying a house, going on vacation, even what I'm going to spend at the grocery store this week because my utility bill could hike next week if heating oil prices go up.
Well, and I feel like I've asked this question a number of times as we've kind of been building up to tomorrow, but this notion that prices can only increase so long as consumers tolerate them, right? Companies have an ability to pass on costs until they don't. And I just wonder if they can't exercise that same kind of pricing power this time, given the kind of bad vibes we are seeing out there in the consumption economy. What does that imply for where we might see businesses actually just then trying to cut costs elsewhere in terms of hiring or even layoffs? What could this actually portend?
That not necessarily as far as going to layoffs or hiring, but in the first Trump administration, not all of the tariffs were passed through as price increases. Companies said, we think we can cut a little cost here, find some pennies in the couch cushions here, lower our margins by a couple basis points here, and together, taking all of that, you didn't see a one-to-one pass through.
We're talking a different scale this time, though.
More recently, both a different scale and more recently during the pandemic, during Russia, Ukraine, et cetera, companies, in fact, in many cases, passed more than their increased costs on to consumers. Consumers are extremely price sensitive. We've seen expectations for jobs day on Friday that wage growth will tick down. JOLTS was a miss this morning. We are already starting to see softening in the labor market. And so if you, again, as the Fed has said, higher unemployment, higher prices, and slower growth, all taken together results in what you had in the 70s, which was the last time uncertainty was this bad.
If we get across the board tariffs tomorrow, and to your point, we don't know. We could get some form of reciprocal. We could get a lot of different forms of things. He says he'll be relatively kind. But say you get that 20% across the board that at one time was promised by this president. Is that an automatic recession, as some have predicted?
I don't know that I want to put odds on it, but I did see that, Mark Zandi doubled his recession forecast this week. And that is, I think for a while, I sat in this room a couple months ago after the election and said the market has priced a lot of this in. We had not seen a lot of market movement kind of in the month after the election. We are almost 100 days into this administration. Market's up a little bit today, but I suspect we won't see that for very long. Stock market, obviously not the entire story, but I think as we start to see more and more data come in on slower job growth, potentially negative jobs, slowing wage growth, higher prices, all of that taken together points to recession.